The management joining us right now to give us a sense of how the quarter was and the expectations for the coming quarters. Let's welcome in the management. We have with us Mr. Anant Gupta, the CEO. Mr. Gupta, thank you so much, sir, for joining us. And we have Anil Chanana, the CFO. Gentlemen, first, congratulations on a steady quarter once again, given the fact that it had less number of working days and, of course, lots happening on the global front. Mr. Gupta, let's start with you. Let's talk about the quarter. How was the quarter for you operationally?
It's great. I think, overall the quarter has been very good. Our net margins, 9th quarter straight, continue to grow at 18.3%. But I think overall, if you look at the calendar year, I would first draw the attention to the calendar year. We crossed $5 billion in revenue for the year. Three of our businesses actually crossed a good milestone of $1.5 billion for the year. Infrastructure services crossed 1.5. Europe as a geography crossed $1.5 billion in the year, and the manufacturing vertical crossed $1.5 billion. So all in all, a consistent, steady, consistent performance. If you look at the way this growth has come specifically in the quarter, infrastructure services continue to deliver 6% Q-on-Q growth. If you look at software services, that was north of 2%. Both the enterprise services side as well as the engineering services side, both showed in good growth, north of 2%. BPO grew well, again, although from a small base, but demonstrating the strategy around large transformational BPO deals. Following a similar trajectory as the infrastructure business maybe 4 years back. So, that also delivered well. So all in all, I would say, the growth has been good. All service lines kicking in well. No specific call-outs on geography. Both Europe and US continue to deliver well over there. So a pretty good year, a pretty good quarter all in all.
All right, Anil, let's talk about the margin picture. EBIT margins at 23.7% despite a wage hike. This is actually quite baffling to me. The state was anticipating 120, 150 basis point drop in margins sequentially. That didn't happen. Can you help us understand why?
Sure. So we did work on the margins, meaning that we had a headwind of currency this quarter, which was 30 basis points. And we had the headwind because of the wages this quarter, which was 70 basis points. But it was offset by the savings we made in the depreciation, the savings we made in the G&A. So we were able to offset whatever the headwinds were through business efficiencies and the other efficiencies in the business.
What was the impact of cross-currency movement?
30 basis points.
30 basis points. Okay, Mr. Gupta, let's talk about growth that you're witnessing across various verticals. Particularly, also let's add a bit color to what's happening in the US right now. US announced QE taper. Now, obviously, that is going to create opportunities as well as some issues as well. So how are you capitalizing on that opportunity? I believe Europe has grown for 3 straight quarters, outperforming US for you. Was that the same trend this time around?
I think largely yes. Again, given because of a latent demand in Europe, right? But let me kind of put some color around where we see the growth happening. It's really been around the rebate market. We've always been saying that's a market which has been continuing to show a good strength, and going forward into the following years as well, calendar year 14 into 15 as well, we continue to see that market to be strong, right? The numbers are large, and whether we look at it from an infrastructure services or application services or BPO or integrated deals between them, that market continues to drive growth in there. With respect to some of the CTB changes or the CTB kind of services, I think there has been an uptick in the engineering services. We see some amount of revival in the high-tech companies, largely driven by the fact that they do need to introduce new products and technologies in the marketplace, and they do find a strong value in the proposition that we have, which is around risk reward and IP monetization. So that continues to drive the growth over there. The alt ASM strategy, which we had announced earlier in the calendar year, continues to deliver, slow but continues to show good gradual growth in terms of increased value proposition. So I would say there is no call out very specifically around any significant change in the trends in there. They continue to be the same as we've been talking about. Some of these changes around continuing pressures on transforming the business continue to put pressure on cost optimization. The fact that they need to invest money in CTB to grow their businesses continues to put more pressure around extracting more money and extracting capital out of the run the business services. So that continues to play out.
Just coming back to the earlier point, what was the volume growth in software services business?
I think it was...
The overall volume growth has been 3%.
Overall 3%. Okay.
Yeah.
All right. Let's talk about how the quarter was for you as far as deal signings are concerned. I believe once again you have crossed 1 billion TCVs during the quarter. Can you add a bit color more on what exactly are the clients telling you right now?
So the deal wins was good, and again another $1 billion of quarter. 50% in excess came from infrastructure services, but a good mix came from other service lines, so that is healthy. So good balance. Continues to show the momentum in infrastructure, no slowing down there. Plus, of course, kicking in of other service lines in there, so that's showing there. From a client profile perspective, about 80% wins have been from the Fortune 500 Global 2000 customers. That's an important measure and metric for us because that's the market we really track in terms of where we want to be. If you look at from a geography standpoint, again, it's been similar between Europe and US, no great difference there. Financial services, public services, manufacturing continue to drive a larger proportion in this specific quarter. But again, no significant change in the trend.
But how is the US revival? Is it producing any meaningful results right now? As far as the next year IT budgets are concerned, what's the talk that you get when you talk to clients? Are they a lot more confident about next year's IT budgets?
So I would say the IT budgets are similar. So we're not seeing any great change in the trend. They continue to be flattish. There is continued pressure around reducing, the cost side of the spend in the IT budget, so that can fuel the CTB kind of spend or the discretionary side of the spend. So I would say the budgets continue to remain flattish. The focus on trying to optimize costs continues to be there, unlock capital and use that to invest in services which are required to grow the business.
Anil, let's talk about the margin picture. Fairly decent performance, but how many levers do you have further on to actually improve on the margins? Because I think this is perhaps a very bullish performance that you've done. 23.7% is, I think, at the upper end of the expectations. Can we see more improvement? And if yes, what are the levers that you have?
So let me stay away from giving any guidance, but I think we need to invest in our business. I mean, new service offerings are coming. We announced yesterday partnership with CSA, the digital system integration strategy. So we may need to make investment. So we're focused on cutting down wherever we can. Like in the G&A, we have sort of reduced our spend by 130 basis points year on year, and then invest it more in sales and marketing, invest in developing value propositions, frameworks, etc. for our customers.
Okay, let's talk about the currency. The last 2 quarters, I think since June, July, right up till December, currency has been a major factor for us. And a lot of IT companies, some of them did actually go horribly wrong with their hedging strategies. But let's talk about how are you managing this currency volatility? What's the current hedging strategy, the outstanding hedge positions that you have?
Sure. So we follow a layered hedging policy. And our hedge position today is like close to 1.3 billion, out of which close to 300 million are the balance sheet hedges, and $1 billion are the cash flow hedges. And so they will mature over a period of time. And if you look at the impact of the hedges on so it's helping, it's sort of there's no major deviation in our net income. So if you look at our net income has improved this quarter, because the hedge impact, the negative impact of the hedges come down this quarter. From 37 million to 25 million. And in the next quarter will further come down, which releases the money which we can invest back into the business.
But do clients come back to you and say, okay, give me some benefit at least of this currency depreciation? Has that been communicated to you?
I think overall customers continue to look at the overall business case for their engagements, right? And obviously, yes, in areas if you are largely on a time and material staffing kinds and where the differentiation is not there, customers do come back around that. But overall, I think, what customers have been, I think the pricing has been stable. The focus is on the business case that is delivered over a period of time. So I would say that there's really no change that we have seen coming in as yet.
Well, on the issue of pricing, do you see pricing improving? If US and Europe start to pick up, the economy start to improve, does that translate into better pricing for you?
I would say, the era of, the pricing models itself have changed, in the last 3-4 years. So, with every change in the market dynamics, I think it gives a trigger to change the model itself. The market has moved more towards an outcome-based, fixed price, managed services. So they are really looking at what is the overall, value which is delivered, what's the total business case which is there. So the pricing models around dollar per hour and effort, an input effort based model, I think are kind of taking a backseat increasingly. So even if there is a revival, customers will still look at what is the overall business case for the engagements and then therefore take their decisions based on that.